Hello, I'm Gloria Ledoux, bringing you an overview of the amendments made to the Military Lending Act at the CU Compliance Connection by InfoSite. This presentation is going to provide you with an overview of the key changes made to the Military Lending Act that your credit union is going to need to consider and implement prior to the compliance effective date of October 3rd of 2016. So let's get started. The Department of Defense, or DoD, made changes to the Military Lending Act, or MLA, which became effective on October 1st of 2015. Don't panic. Credit unions have until October 3rd, 2016 to comply with the new requirements for most loans. The effective compliance date for credit cards, which is a new loan product covered under the rule, is October 3rd, 2017. So credit unions have a little more time to implement the requirements associated with credit cards. The revisions to the MLA expanded the previous coverage of the MLA. So now many of the loans that credit unions originate will be covered. There are also revised requirements for determining who is a covered borrower under this law and certain disclosure requirements, along with a new military APR calculation. So let's take some time to review. Under the revised rules, the credit union is responsible for determining who is a covered borrower under the rule. The credit union can obtain a safe harbor for making this determination by either checking the MLA database or utilizing a consumer report from a consumer reporting agency. Because the new law requires certain disclosures to be provided and a military annual percentage rate of 36% that cannot be exceeded, this determination has to be made by the credit union prior to the member being obligated on the transaction. Therefore, the credit union should make sure that they develop procedures to determine the covered borrower status prior to the member being obligated on the loan. Your lending or frontline staff will need to know either how to check the MLA database or how to identify the indicator on the credit report and noting their systems accordingly. Also, keep in mind that the MLA also covers dependents, which is more expansive than the Service Member Civil Relief Act, or SCRA. This is also a good reminder for credit unions that the Military Lending Act is completely separate from the Service Member Civil Relief Act, which requires you to reduce rates for existing loans down to 6% for members going into active duty. Nothing has changed regarding the SCRA, and credit unions should continue to follow their procedures in addition to these new ones for the MLA. As I previously mentioned, the DoD significantly expanded the loans covered under the MLA. Where it previously only applied to payday loans, tax refund anticipation loans, and vehicle title loans, you can see the definition of consumer credit in the MLA is now consistent with Regulation Z. So we basically start with a broad coverage of the applicable loans under the MLA. Then we're going to start carving away some exemptions. So here on this slide, you can see where we are able to eliminate loans that are not covered under the MLA. Mostly the excluded loans are those secured by an interest in a dwelling, or if the loan is for the direct purchase of a vehicle or personal property that is securing that loan. Credit unions not only need to be aware of the coverage of open-end and generally unsecured loans, but also loans that they refinance. The exclusions specifically indicate a loan intended to finance the purchase of a vehicle or personal property that will be securing the loan. A refinance would not meet that definition under the rules and would therefore be a covered transaction. The MLA offers multiple protections for covered borrowers, including a limit on the military annual percentage rate, or MAPR, of 36%. This may seem high, but there are fees that need to be included in this calculation that are usually excluded under Regulation Z. Additionally, there are prohibitions on certain requirements such as mandatory arbitration or waiving their rights under the SCRA. Once the credit union has determined that they have a covered loan and a covered borrower, they need to calculate that military annual percentage rate. As the slide indicates, the MAPR not only includes the typical calculation of an APR under Regulation Z, but also other fees for ancillary products. Credit unions therefore need to confirm that their lending systems or APR calculators are including all of these applicable fees when calculating the MAPR, and also ensure that that rate does not exceed the 36% limit. So we've determined we have a covered loan, and we have determined that our MAPR does not exceed the 36% limit. What else does the MLA require? Well, before the member becomes obligated on the transaction, we also have to provide them with a specific disclosure. There are other disclosure requirements that we have noted on this slide as well, but these other disclosure requirements, such as those required pursuant to Regulation Z, should already be part of your credit union's process. To comply with the requirement to provide a statement of the MAPR applicable to the extension of credit for the covered borrower, the MLA has incorporated model language for us to use, which is included on this slide. Keep in mind, the MLA requires us to provide the required disclosure in writing and orally. However, we are able to meet the oral requirement by providing a toll-free number for the covered borrower to use. Therefore, your call center staff or your lending folks should be prepared to handle calls received from covered borrowers to have this disclosure and their Reg Z disclosures available to deliver to the member over the phone. Last but certainly not least, there is a provision in the MLA that limits the security interest for a covered loan to funds deposited after the extension of credit in an account established in connection with that credit transaction. So this is significantly different than most of our processes now, where the Federal Credit Union Act and most state acts allow us the ability to have a security interest in share accounts. Therefore, most of our loan agreements contain very broad cross-collateralization language. So credit unions will want to amend the applicable security disclosure for these covered loans. Amending that language is going to be very important because the MLA also indicates that contracts that contain provisions that are prohibited or fail to comply with the MLA are considered void from inception. CUNA has been in active discussions with the Department of Defense to get further clarification on this portion of the rule, as well as further guidance on many aspects of the rule, including the calculation method of the military APR. Credit unions should stay tuned and be aware that there may be some additional clarification coming from the DoD at some point in the future, and hopefully well before October. Thank you for joining me at the CU Compliance Connection, and stay tuned for future broadcasts on issues that affect your credit union. We are here to help you at the CU Compliance Connection by InfoSite.